matters is you end to stay positive, right? For people that got beat up in August, they would have given their left arm to end a day positive. The ones who, didn't adjust around that kind of a month, right? Keep that in perspective. And once again, I'll say it again, it's all about how much each pip is worth. I've read an article, I can't remember which broker it was, but the average account was under $1,000. Wow, 12 pips with under $1,000. You got to start somewhere, right? I guess. Let's move forward. This is the 23rd. You're done. Okay, here we are. It's Friday. We do a long setup here. It sets up around 205 in this trade, right? Come back around. We have a short setup here at 56.58. 8 pips below is the 50 level. Now remember, that's a psychological number. That's not a market structure number. It's just a number that a lot of traders, I guess, look at. I don't know. I can't ever say, if every trader looks at the 50 level. What traders do look at is the market structure, the swing levels. Now, not every level is a decent level. Not every support level is actually really a support level or resistance level, right? Especially when you're looking at shorter time frames. 56.59 is where this is, right? Kind of chopped around this level too, right here, all the way from the Asia session. So you kind of get a breakout down here. And it's one of those things where people are looking to go short on breaks, and market will give you a little bit and then take it all back. So that's why you want to be aggressive. Well, we said when you get to the 15 pips, right? Do something. And so this trade is actually going to end up +1. The good thing is we're going to come back around with a long entry. The long entry is at 56.71. Sounds good, right? Then we've got this level here, 56.79. Once again, this is not a market structure level, right? It's a directional. So we're going to move around it, but then we're going to go right into market structure. The only good thing is this is a nice rejection off here, a nice move up. Right, this is where once again, when you're trading for a while and you're looking at charts, just a lot of things just kind of pop out at you. So 56.79 is the entry price on this trade. We've got to move all our stuff up, right? Our targets have to go up. They don't have to, but if you're going to be making, adjustments this large, you don't want to end up where your targets are so close that you end up 5 pips and that's it for the trade. So actually on this trade, it's what I did. All right, when I go through them, is I adjusted around this. It brought me closer to these levels here, but I kept in mind it's a six range, and I just kept in mind the way it got this trade kind of broke down, right, with some force, right, but then popped right back up again. Now, even if you don't make the adjustments on this particular trade, it's going to go to target. It actually goes to target better by taking it like this. Right? These are called straddle trades, but if you keep on filtering too many things out, you're not going to be making any trades. So this is how this trade plays out in the end. This is actually the actual stop. What happens is we get popped up here. Stop goes here, 56.91. So I end up 12 pips on this. Right? So the whole day of the London session was 13 pips. So you can see that the normal trade works out for your +19. But I made these adjustments. It would have looked better on paper if I would have said, no, man, I took it right here. Just can't do that, right? I'm not here to make the strategy look good. I don't have to. It looks good, period. But I wanted to adjust around here. Did that, added to my targets, and this is how it worked out. That's just the way it goes. Okay. The only good thing when you look at markets, you have the swing here. And what do we have here? We have a swing high, and it comes back down. Right, to a swing low, but this swing low is actually higher than this one, which is great, right? Up move. So in order to get in this long, the market's going to have to prove itself and up move anyways, right? So we got the swing low, lower swing high, higher swing low, and to get in this trade, we're going to put higher swing highs in. A couple things can happen with that. You can either have to start at the uptrend, or you can slop sideways, or that whole price pattern just breaks down. That's real time price watching, that's for sure. Let's check out our U.S. session. So we took 2 trades in London. You know, one basically a bust and one for 12. All right, so let's take a look at our U.S. session here. There we come in here. Was there any news? There we go, 8:30 news. So we come in, we have this short set up here. I'm not going to discuss this, don't have to. Nothing happens with that. Here's the thing. This trade sets up at 8:20. Trades in 8:22, it's in. That's 8 minutes before noon. News. And what's our rule? Rule's 5 minutes, right? I want to keep things as rule based. So now we're in this trade. Let's see what happens. There's our news coming out. Probably seeing this, you're probably going, ah, man, I'm in this trade. I should have just said, hey, you know what? Just mark it out. Let's keep going. Now where are we? We're at trade management area, right? Now you're probably thinking, oh, fine, I get to move my stop. And there's your target right there. And you are out of this trade at 8:36 and on with your day for a full 19 pips. That's it. Now, here's the thing. Many traders are going to go, well, hey, look, there's a great trailing opportunity. And there was. Up into this area here, right? When it gets kind of sideways action, you're still in this trade, right? Because you don't just, you know, the profit line is at 57.75. You don't just put it right on there, right? One good way you can do this is look where it is at 57.75, right? -2 and round it down. So 57.70 around this area right here. And vice versa, when you're going short, you know, you want to use your trailer if you're using a trailer, but an objective way of saying, okay, well, we're going to put it, you can put it down that way, you know, -2, round it down, brings you to 70, right? And this trade kind of pulls off nicely. It gets you in at 57.36, goes all the way up, 823 -2, so 20. Well, you're out of this trade. Right? This low in this candle is 19, so you're out of this trade here at 58.19 from 57.37. But we're not going to count this trailer, right? We're not going to count this trailer because we're not trailing right now. We're keeping it simple, right? Trailing is a different thing altogether. You know, once you start trailing, especially when you start trailing and it pulls back, it takes you out, and you would have got out better at your targets. You know, it's different on your psyche. So we want to keep it simple for now, right? Keep it simple for now. Yes, this move happened, and I'm sure some people took it. I'm sure some people saw it and said they took it and didn't take it. You know, I'm sure, you know what I mean? But we're keeping it simple for these videos. That's key right now because, you know, resetting. Keeping it simple. Keeping it simple. Let's look at our spreadsheet, though. Yeah, you missed this move, but let's look at our spreadsheet. Okay, now as we look at this